What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and if you're new to the channel, I'm an automotive expert. I've been doing this for over 20 years. I talk all things automotive on this channel. So if you're interested in things like that, definitely smash the subscribe button and the like button, and let's go ahead and get in the video. So today we're going to be talking about auto loans. You know, as you guys know, interest rates are going up, inflation is going insane, dealers are not selling as many cars. Every franchise dealership is actually reporting loss of sales by double digits, over 10, 20%. A lot of the banks are having record amounts of repos. About a month and a half ago, 2 months ago, we made a video talking about how the automotive recession was going to begin because of loan defaults. I got so much grief on that video. You can watch it. It's my most watched video. It's got 370,000 views and like 1,000 comments. People thought that, oh, there's no way, cars are going up, nothing's going to happen. Well, it's happened. You know, we're watching prices go down. A lot of the dealers are lowering their over MSRP reserves. But the biggest thing is a lot of the banks are seeing record defaults. When I first talked about this video, it was only subprime lenders. They were talking about having double-digit default rating. They had people that basically originated their loans in 2020 and 21 that were just defaulting and leaving their cars. Now it's slowly hit the prime sector. Now, I don't want to beat on this horse because I want to go into the next part, but I'll give you a really quick recap. What happened, and the reason why it's such a big deal, is in 2020 and 2021, that's when all the stimulus ballers are making their money. So what were the banks doing? They were writing and underwriting loans to get these people cars. So these people were making $4,000 a month. Let's say they're making $2,000 before. Now they're making $4,000. Now they can afford a brand new Charger. So they go to Chrysler, they get a brand new Charger at 20% interest at a $1,000 monthly payment, and then they leave. Well, what happens? The economy's back open, they go back at the regular job. Let's say due to inflation, they're making $3,000 a month, but their money's not going much further. They have a $1,000 car payment. They have, you know, their insurance. Obviously rent's going up due to inflation and everything else. And so now these guys have maybe, let's say, $4,000 in monthly expenses. They can't afford their cars anymore. So one by one, all these defaults are going straight to the auction. And the banks are getting scared because a lot of these cars were over leveraged. They were giving them way too much money for them, 160, 170% LTV, just crazy numbers. Now, if you want to watch more of that video, I'll link it here. But like I said, I don't want to go into it too much. Basically, the gist is banks were lending way too much money with less down payments, and they were qualifying people that really didn't make that kind of money. They were just going off of the stimulus ballers. So if you had two people in a household making, you know, $4,000 each, that's $8,000 a month. So they're giving these people brand new Mercedes, BMWs, Cadillacs, whatever else. And now everything is starting to collapse. So anyways, so what's happening now is a lot of the banks are starting to pull back. Now, we talked about the subprime banks really pulling back. I'm starting to see some of the prime banks get rid of some of their, we call them boutique options, like the 84 months or 82 months. A lot of that stuff is gone. There are some banks that still have it, but a lot of the bigger ones are pulling that out. Ones where you could buy certain points down. So all my finance managers, if you love to buy points down, a lot of them are taking those programs away, or you can't buy down as deep. As well as, like I said, they're not doing as much LTV. I think that is the biggest difference, because now those cars are hitting the auction. They're not getting exactly what they're getting for them. And so now they're forced to actually take that loss at the auction when the repo hits. So if they buy a car from a franchise dealer for 170% of LTV and then turn around and take it to the auction and get 80% of LTV at the auction, that huge gap, they can't sustain those kinds of losses. So what do? They tighten up the purse strings, money stops flowing, people start freaking out. And we've already seen this happen. Every single manufacturer has, major manufacturer, we're talking Ford, Chevy, Honda, Toyota, has reported double-digit down sales in the first quarter. What's the other one? Massive repo amounts. There's a lot of banks that are over double-digit repo amounts because of all these stimulus ballers losing their cars. So what does this mean for you, the consumer, and a dealer? Well, as repos go up, that means supply goes up. With slowing sales and everything else and people getting less and less credit apps and banks not approving, the demand's going to go down. So this is why I was saying get rid of the expensive stuff and just hold on to some of the cheaper stuff and just keep the volume model going. Just try to liquidate these cars as fast as you can, because now it's finally hit us. And the scary thing is, you know, we've talked about a few of these things, and I'm watching so many publications finally starting to talk about how there's record defaults and the car bubble's about to pop. So when we were mentioning this like 4 or 5 months ago, and people thought we were nuts, and now the mainstream media is finally catching up and starting to talk about it, and now I have dealers freaking out and panicking. What should I do? If you're a dealer, stay lean, stay mean, do only volume. Just make a certain amount of money and then get your cars out and move on. If you're a consumer, wait a few more months, you'll get a great deal on a vehicle. Unfortunately, you may not get the best interest rate or anything else because the banks are getting strict. Now, I want to go more into that. A lot of the banks that I deal with started to send me, like, you know, updated slips of like, hey, these are going to be our new banking laws, or these are our new regulations. It's called a book sheet. Every bank has like a book sheet where they give you their formula drawn out. You know, different years, models, makes, how much money they're going to give you per car, blah, blah, blah. And I started getting a bunch of these over the last week. It's because they're starting to offset their default rates. They're worried about having so many repos that they need to start changing their lending acts. Now, a lot of the franchise stores, you'll be the last ones to see it, because they allow the franchise stores to basically shovel all the dog shit of the really bad customers, people with really bad credit, down their throats. But the independents are the first ones to see the spike. Higher bank fees, higher recourses. They're less friendly on like STIPs. They don't exclude anything. So now they're going to want bank statements with pay stubs. They may not want to finance your customer for a Cadillac or a Mercedes. They may want them to get a Malibu or a Ford, something like that. They're going to do little things here and there to slowly mitigate their risk, so this way they can put their portfolio back into spec. Now, this stuff has slowly been happening since we made the video. A lot of people haven't really noticed it, but now I'm getting lots of dealers like, hey man, this bank used to buy all these cars for me. I had no problems with 3-month jobs. They just told me 6 months jobs minimums now, and they won't take anything less. I was like, because they're having defaults. They're all having record defaults, so they're trying to mitigate that risk. So even you as a dealer, if you could put in the comment section below, what have you noticed, you know, your bankers telling you? You know, did they take away some programs? Did they tweak a few things? Did they add recourse? Did they raise the bank fees? Which I think everybody's going to say probably raise the bank fees. Did they take out like certain programs that you guys love? Maybe a first-time buyers program or something else like that. Like I said, it means a lot to me if you put it in the comment section below, because this is how we all learn together and we share. So make sure you put that down below. So I just wanted to put out this quick video because, you know, I've been out of town. I went and watched my buddy Graham fight in Tampa. We were in Creators, I think Creators Clash. Great event, all for charity. It was probably one of the funnest boxing events I've ever went to. Met a bunch of really great YouTubers, great for networking. But unfortunately, when I came back, I got sick. So I'm actually still technically sick right now. So if my voice is a little bit deeper, don't be turned on too much. It's just because I'm sick and I can't talk that long. So as you guys know, I'm long-winded as hell, and my videos are about 10 minutes, but I can already feel my voice starting to go out. So I want to leave on a high note. We got a lot of really great things planned for this next week. I got some friends helping me do some more videoing for Workshop Wednesday, so now I can be behind the camera more, doing more physical stuff and actually working on the cars instead of me trying to run around my iPhone like trying to take pictures of stuff. Also, we're going to be having some more educational stuff, so if you have any questions on automotive, you want to learn about dealerships, rental car companies, shops, don't forget, we do consulting calls. Links always in the description below. I also have a Facebook group that's also down below. Check out our website. My email's down there as well. If you have any questions, feel free to email me there. Also, you can check me out on my new handle, which I just bought, which I'm super excited I was able to get, is Lucky Lopez. Just like that on IG. I was super excited. I couldn't get Automotive Life, and all I had was automotive.life, but we're able to get Lucky Lopez, and it's just been awesome since then. Hopefully next week we'll be verified, then we'll be baller status. But anyways, I want to thank you guys so much for watching. If you have any questions, put them in the comment section below. Make sure you follow us on Instagram. I post funny stuff there all the time. I actually had a questionnaire every Sunday. We answer questions from fans like you. So if you just want to ask me a question, I'll actually post it on there. I do it this way because I don't want to answer the same question 77 times. So if we do it on Instagram, it's much, much easier. But anyways, I want to thank you guys so much for watching, and we'll see you next time.